Devs.
Ladies, gentlemen, Monday night, Johnny, sharp intro. I like that one. It was good. That was a bit of fun. But thank you, everybody, for joining us. It is 8 p.m. Monday, which means Novak news time. Tonight, we are just going to be pretty quick. We're not going to take up too much of your time. We wanted to run through something. Obviously, the end of financial year has just come through, and a lot of people talking about what's ahead, interest rates, home prices, rents, where's everything going. So we're going to do a quick little revision on what the market's done and also what some of the key kind of, I guess, marketing platforms are forecasting for us. So, I mean, let's look at spring and summer. So we're coming out of the winter cycle now. We're about to hit the spring cycle, which leads into the summer cycle. Traditionally, the most active time to be selling real estate. Buyers come out. It gets a bit warmer. Houses come on. If you've got a view, it's something you really want to, take advantage of. So yes, you do always see a bit more coming onto the market for that spring, summer selling period. How much more will yet to be seen. Last year, we didn't see a very strong summer or spring selling season. Obviously, interest rates are really, really big factor. Tomorrow, the interest rate decision coming out for August. A lot of the reports indicating it's probably going to sit still where it is. But yes, I think you'll see more stock, but that may mean more buyers competing with more properties. If anything, it's just going to be a bit more activity. Johnny, let's jump back. Let's have a quick look at kind of where have we come from? Where have the last 6 months been in regards to property prices? I know you were looking at Domain.
Yeah, so I was having a bit of a read through Domain and what their predictions are, and kind of what's been happening over the past 6 months and looking into the next 6 months as well, and what's kind of going to be happening there.
Yeah.
So the median house price of Sydney is expected to rise by 7 to 9% within the next 6 months, which is pretty big. Considering at the moment it's kind of sitting at a standstill. I'm not sure if that's due to the interest rates. Everybody's a little bit cautious of what's happening there. I think tomorrow is going to have a good indication on what's going to happen over the next 6 months as well. But that's something that's going to be predicted by Domain as well. Yeah,
nice. And when you said bit of a standstill, so the market, I've noticed with the open homes that we're holding, a lot of the buyer activity that I'm talking to is new buyers researching, following. Not everybody's ready to make a buying decision, and I think when we look at buying cycles as well, buyers will generally transact in 2 to 3 month cycles as well. So the summer cycle of buyers that were, say, looking around that December, New Year timeframe, a lot of them transacted come March, April. Now we're in that kind of May, June cycle, but a lot of that is fresh buyer activity. So they're researching. They're probably going to be ready to buy in the next 3 to 4 weeks, which could time in perfectly with the spring cycle. But right now, I think it's a very good time to be buying because it seems to be, not enough. It's not that there's an oversupply of buyers pushing prices up, but it's not that there's an oversupply of property pushing prices down. Everything just seems to be pretty stable.
Very, very stable at the moment, and we're definitely seeing good numbers through open homes as well. It's not like there's no buyers coming through, but like you said there, I think it's a lot of research going on and people very early stages getting their finances sorted, that sort of thing, with the end of financial year happening. And people moving into the spring, summer season looking to buy then.
Yeah, definitely, Johnny. So I got some statistics from realestate.com, and I'm going to run through kind of the capital cities and give you my ideas as to why I think certain cities have performed how they have. So the data that I've got is per financial year. So let's look at what nationally property for the financial year of 23 to 24, 5.9% increase in property pricing. Pretty astounding when you consider what's been going on with interest rates to see still, say a 6% increase in prices nationally across the country. Capital cities, 6.3% was the national figure there. Let's look at the major players and who's performed really well. Perth took out the crown for capital growth last year. 18.9%. So a 20% increase, short of just 20% increase in property prices through the Perth market, probably off the back of good economy, obviously on the mining sector. Very, very strong prices. Also affordability when you're looking at, the Sydney or the Melbourne markets with Perth. So 18.9% last year. The forecast for 24 through to 25, anywhere from 8 to 11% has been forecast for growth in Perth. So
that's big numbers.
Really good. Really good. Number 2, believe it or not, Adelaide. A lot of people forgot about Adelaide. It feels like a country town when you come from Sydney down there.
Sydney, definitely.
12.9% increase last financial year. Looking at an indicator of 5 to 8% increase in pricing for the coming financial year. What's interesting? It's interesting. All of this data is coming from realestate.com and the sources they use, primarily CoreLogic. So everything is going up. Brisbane coming in at number 3, 12.2% increase in property prices over the last financial year, estimated to project another 3 to 6% in growth for the coming year as well. Then we've got Sydney. Some people say one of the most expensive cities in the world. I'd probably agree with that.
Yeah, probably
Johnny,
agree. Yep.
5.8%. So in light of all of these interest rate rises, 5.8% increase with 3 to 6% projected forecast growth for this financial year coming. After that, we go to, it's Hobart. No, sorry, it's not Hobart. It's Darwin at a 1.4% increase, 1 to 4% increase projected. Canberra after them at 1.3% increase last financial year with an indicated 2 to 5% increase pricing this year. Melbourne, guys, come on. 0.8% increase last financial year, 3 to 6 coming estimated for this financial year. I'll just say Dan Andrews probably got something to do with that over there. And then Hobart coming in at negative 1.5% growth. So prices actually did come back slightly in Hobart. But again, when you're looking at the volume of transactions, it's probably a little bit less. And they're looking anywhere from up to 3% growth there next financial year. So the key takeaway, I think, Johnny, is everything's indicating to go up. Last year, all the prices did go up. Nationally, 5.9% an increase. So in light of everything the media has been saying, in light of everything the Reserve Bank's done, Australia still remains one of the key performing property markets in the world. And obviously, an area both of concern. I mean, look, there's positive note in that for homeowners. Areas of concern are for those trying to still get into the market where they feel it is just so expensive to break into this market. But everything's just going up.
Yeah, seems to be that way. And I think it's a mixture of a few things. We've got a bit of key factors here just on why we think that's happening and really why that's going to be happening over the next 6 months. So obviously there's a bit of an undersupply on houses at the moment, which is going to drive those prices up. The buyers are going to start coming in and that sort of thing. So, which I think is going to drive prices up and keep the market quite hot. So interest rates will eventually let off, come down a little bit, which is going to give buyers a little bit more freedom, more money to spend, get them back out in the market, especially during that summer period, which is good. And the population. So with all the population coming in, there's obviously supposed to be quite a few new houses being built, duplexes and that sort of thing that's going in around, especially around here, the Northern Beaches and this kind of area here, which is going to drive those prices up. Property is going to start coming in, higher demand, and obviously higher population, which creates more buyers.
Yeah.
And then
spot on. Sorry, guys, that was a coffee break Johnny and I had to have. I accidentally pressed the button, but we had a quick coffee break.
Bit of a break between.
Definitely. Sorry, John. I cut you off. I don't
That's
know.
all right.
I don't know where you're up to.
No, you're right. No problem. Yeah, so basically that's pretty much it from me on that side of things. So I think those are the three key factors of what's going to be happening over the next 6 months. That's just based off statistics and what Domain and realestate.com have said, but looks like property prices are going up.
Yeah. The other thing to probably be keeping an eye on that will drive property prices is also the rental market. And there is a correlation between the two. The reason, in my opinion, that we saw such a surge in rental prices was, yes, one was affordability and how much obviously that it cost and the deposits you needed and interest rates to get it into your own property. A lot of people deciding to go down the rental path. But what we also saw a lot of last year were transactions where investors were selling off one or two of the investment properties, one because the rates had gone up, but more so to shore up the position of their own homes. So a lot of people were downsizing the portfolio to just make sure that as the rates came up, they were there and they'd covered their home, with repayments and financially they were safe to protect themselves, obviously. Now, what that's done is it's pushed real estate that would typically be transacting in the residential cycle for lease, for rent, into the ownership cycle. So a lot of first home buyers came in, bought that, took it out of what would typically be in the rental cycle, reduced the number of properties in the rental cycle and moved it into the home ownership. So that shrunk down rental numbers, pushed up prices in the rental cycle, and put that pressure on. Now, if the rates continue, if we don't get some relief from the rates or some changes, that could still be the case. I think last year we probably saw a lot of the transactions that were, say, mortgage stress related, as opposed to this year. But I'm not saying that that's the case. There could still be more of that mortgage stress, in the marketplace, and that could also, shorten that rental demand and drive definitely rental prices.
Yeah, I think the rental predictions at the beginning of the year were across Sydney were supposed to be very, very high and quite forthcoming, just due to the fact of, like you touched on there was a lot of people looking to go out and rent just due to everything that was happening in the market, all the interest rates, that sort of thing.
Yep.
Whereas I think now it's kind of slowed down a little bit. We're seeing a lot more rental stock. And it's obviously not as high demand. I think that obviously due to the fact that it's winter. A lot of people don't like moving during winter as well. They like to keep it secure. And more towards summer, we'll probably start to see a pickup of that. Rental prices will probably start going up as well.
Yeah.
But that's obviously due to what's happening in the sales market as well.
Definitely. So spring, summer, is it a good time to buy? Definitely. Are there projected growth ahead? Definitely. If you're thinking the market's going to come down, I'm going to be getting myself a property at a cheaper price. The data from last year certainly does not indicate that, and the predictions coming out of most of the major sites are also not predicting that. So my best advice is, if you're looking at buying a property, try to get into one. If not, try to get into a rental and secure that rental kind of lease for as long as you can as well.
Sounds good.
Ladies and gentlemen, thank you for joining us. Very quick one. Johnny, good to be here with you tonight. And look forward to seeing you guys again shortly.
Thanks, guys.
See you soon.